Hey, what's going on, guys? Going to take a quick look here at Cardano. Ticker for this is ADA, and right now I'm currently on the weekly time frame. A couple things before I get started. First, if you're not subscribed and you want to get notified when I drop new content, click subscribe, click the bell, click on all. If you don't do those last two steps, YouTube's not going to notify you when I release the videos. Also, if you want a place to trade Cardano or pretty much any of the other coins I talk about on this channel, you can head over here. This exchange is called BloFin, and this is one of the only centralized exchanges that is not going to hassle you to submit your KYC, at least not now anyway. I know when a lot of exchanges start up, in order to onboard a lot of users, they don't require KYC, and then later on they roll out the requirement. I'm not sure if that's what they're going to do here, but as of right now, you can trade on this, you can withdraw, you can do whatever you need to do on BloFin without having to submit your personal identification. All right, and also if you sign up using the link in the pinned comment and the description, that's going to activate a deposit bonus for you. All right, so moving back to this chart, as I mentioned, I'm on the weekly time frame. And last week, we had a major fake out on the market. You see here, actually this same thing is true for a lot of different altcoins. We essentially broke long-term support on a lot of different altcoins, and Cardano is no exception. So if you look at right here, see this upsloping level of support that I mentioned in the last video, stemming back all the way here from the scamdemic crash of March 2020? Well, right here, we finally broke below it. And where we ended up getting supported was this horizontal level of support and resistance. Okay, so you see right here, it was resistance. We broke above it, came back to retest it as support, broke below it, it was resistance. So we did have a lot of history right here. And once again, that's the region that supported the price. So if you want to trade Cardano, I definitely recommend you draw this on your chart. I have it at around 32 cents, so 0.3255. But you could just take a horizontal ray and just paste it right at the top of these candle bodies right here. Okay, and last week we had a very bullish response off of this level, huge bullish candle. And in the process of forming this candle, we reclaimed this long-term level of support. Okay, so even though we broke below it right here, I would still have this marked on the chart just in case we do see a pullback. This may be a level that buyers step in to defend. Okay, and speaking of pullbacks, I'm going to change the time frame. Let's take a look at what's going on the, let's look at the daily. Okay, so here you see we had a lot of bullish momentum off of this horizontal support region, and we're getting a little bit of a pullback right here, forming a doji reversal candle, and the support we're getting currently aligns with the previous resistance region right here and here. So just to kind of illustrate that, I'll take a horizontal ray, and you know what, I think it aligns right at the low of this wick right here. Yeah, so if you want to draw this on your chart, just run the line right at the low of this wick. So support here, support all throughout here, broke below it was resistance, and resistance right here. And now that's the region that we're contending with right now as a support. Okay, so where we are right now could give you a pretty low risk entry. Now, I'm not saying to take it, but just theoretically, this is how you would do it. This is how you would look for potential trade setups. You wait for the price to break an established level of resistance. And when the price pulls back to retest it, resistance to support flip, that's where you can enter. So theoretically, if we were to enter right here, could place a stop loss right below this wick right here. And then if we were to target just the top of these candles right here, that would give us a risk reward ratio of 1 to 3.43, meaning for every $1 we risk, we can get over $3 in return. And percentage wise, it would be you would risk 2.69% on this trade to potentially get just under 10%, so 9.22%. Now, if you wanted to be extra conservative and just target the previous swing high rate here, that would give you an R&R of 1 to 2.77, so still really good, risking that 2.69% to potentially get 7.45% to the upside. All right, so let's change the time frame, and let's see if there's any signs of the price turning around where we are right now. We did get some positive momentum off of this as indicated by this long week, but now the sellers are coming in once again. So actually, let's take it back out to the higher time frame, and I want to show you a couple of things. I know they say hindsight is 20/20, but just, for educational purposes, when the market was dumping and everybody was panicking, there was something that became apparent. So right here we had a low, and then we had this massive dump, and then we made a lower low right here at the support level. But if you look at the RSI divergence indicator, so this is just an oscillator, here we have a low followed by a higher low, right? So low, lower low here on the price, low, higher low here on the oscillator. It's called a bullish divergence, and it kind of foreshadows a turnaround point in the market. All right, so let's get rid of that. And let's say if we do end up breaking below this current support level that we're at, In order to find the next potential support region down, what I would do, I'll take a Fibonacci, I'll run it from the swing low right up to the swing high of this move, and that's going to give me these retracement levels. So the 382 is all the way down here, which kind of aligns with the top of all these wicks right here. That's going to be around 0.3978. So if we do end up breaking down below the current support, the next level that I think buyers would step in would be right around here at the 39-cent mark. And then below that, you have the 50, which would once again bring us below this long-term upsloping trend line. And that's going to be around 38 cents, so 0.3815. Okay, now as for targets to the upside, I'm going to take this back to the weekly time frame. And there's a couple of things I want to show you here. So you see how we have this long-term falling wedge pattern that we eventually broke out of. Now these pattern breakouts, you can do a measured move. So what you can do is you can measure the widest part of the wedge. And in order to determine the breakout target for this particular pattern is you would project it from the breakout point, right? So here's where we broke out. So that would bring us right up to around $1.32. Now, we broke out of this in January 2023, so we're about a year and a half into this breakout and we have not even come close to that yet, right? So not all targets pan out. That's just the textbook way of doing it. Now, what I prefer to do to find the potential levels of resistance to the upside, once again, I'll take my Fibonacci retracement tool, and this time I'll measure it from the swing high all the way up here, down to the low, drag it across, and that's going to give us these Fibonacci levels once again. So right here, the 382, if I zoom in here based on a weekly time frame, you'll see that this level served as a resistance for about a month and a half right here. You see how during the week we would trade above it, but by the time this candle closed, seller stepped in, smashed it back down, candle bodies closed right back below this resistance level. Okay, when we finally broke above it, the next level up from there was this 50% retracement level, and we got rejected just shy of it by fractions of a cent. All right, so obviously these two levels are going to be resistance on the way up. If we do get some positive momentum from where we are, you're going to have this 60-cent level, and then you're going to have beyond that, you're going to have about 81 cents, major levels of resistance. If we're able to crack that, then I'm going to personally be looking up here at around $1.12 at the 618 Fibonacci retracement. And then from there, we have the 786 at around $1.75. So just keep that in mind if the market turns bullish and the price is heading up, where you'd want to maybe scale a little bit of profits out and then hope for a retracement and then buy back in. Now, if we end up getting a full-on altcoin cycle, I don't think we're going to get, just come up to this 50% level, get smashed down, and that's it, right? These are just some potential resistance points on the way up. All right, so if you want to open shorts around here, be very careful, have a very tight stop loss because you would be trading counter to the trend, and it's obviously quite risky to do that. And also, if you've been holding Cardano for quite a while and the price comes back up to this 50% retracement level at around 81 cents, I also wouldn't recommend you sell your entire position because given where we are just in terms of the historical cycles, if history repeats, chances are that we just break through here and then head for much higher targets, right? So you don't want to sell your entire position right here at 82 cents and then watch it go all the way up to $3, right? Okay, so that's just a quick update here on Cardano. Fake out right here with the breakdown of the ascending level of support, but we did end up bouncing off this established level of support here at around 32 cents. And where the price is currently trading, just watch this level. Right here, support is around 41 cents, so 0.41887. All right, guys, hopefully you found that helpful. If you did, smash the like button. It helps me with the algorithm. If you want to place to trade this, once again, as I mentioned, you can head on over to BloFin. As of right now, they're not pressing people to submit their IDs. And if you sign up using the link in the description, you're going to get a deposit bonus. All right, guys, take care. Have a good day. Bye.